Hi there, this is Raghu here. Now, based upon our channel members' request, we thought that we will do some video where you can pick certain signals while trading and do trade. So most of the times market keeps moving in one direction. And if you know the way I like to use the price action is based upon the buying and selling areas on the pivots, right? So if you know in general, I just want to show you something, not this one, not this one. Okay, let's use this one. Let me remove everything from here and I'll keep only pivots. This is the pivots. I don't need Bollinger Band. Okay, this is a pivots. This is a price action. How I just want to give a quick introduction. So price action, we have a lot of candlestick price action patterns like engulfing, inside bars, pin bars, and outside reversal, or you can call a dark cloud or piercing pattern. So there are quite a lot of price action pattern, evening star, morning star, and most of the times the new traders, when they are trying to use the price action, are afraid because the way the new traders trade is when the price is coming down, they want to buy just to see that price is reversing and they're losing money, or when the price is going up, they want to enter up, right? So will it go further up or will it go down? So we already have pivots here along with the price action candles. We have the central pivot range, which can act as the support while price coming from the top, or resistance when coming from the bottom. And we have R1, R2, S1, S2, which can act as support and resistance. To know the in detail pivot uh, trading complete methodology, including the price action, do watch my video on the YouTube. It's a 2-hour session. I did not wanted to cut it down, but I have tried to capture the most of the pivot essence here. Now to quickly go up, okay, let's see this today. Okay, this is a previous day high. This is the previous day high, these green dots. Why? Because this was the high it hit on Friday. Now here, previous day high, previous day low, most of the times acts as support and resistance. Now here, observe this pattern. Price comes from the top, tries to take the support near previous day, and then faces some kind of selling pressure and tests CPR. So now this support is tested and broken, which means as per price action, this is an established area of interest where sellers would repeat same action again and again until proven otherwise. What happens next? Price comes here, same previous area, faces buying pressure, recovers again, forms a double top. Now here in this area, so okay, here we had a pretty good red bar. In this area, we have a lot of sidebars and you don't see any price action here. Now, how confident you are that if you take a trade here, it will go down? Now, usually professional traders, they just take it here because they know every trade is a risk and they are going to keep a minimal stop loss. Above this high would be the stop loss. They will just short because morning they have seen the first signal as short and this support area has been broken. In simple essence, try to understand it, guys. Now here, when it comes here, most of you will be afraid to take the trade. Now, how do you identify this area of interest, whether to take a trade or whether not to take a trade? Now, that is where I'm bringing up the new method, which is nothing but, I'm going to remove this. Okay, just for our interest. RSI. So a lot of people know about RSI. It's one of the most versatile indicator. People call it a momentum indicator or strength indicator or a strength oscillator. As the name says, it's relative strength index, relative strength index. Understand? So this is a 14-day period RSI. So for the last 14 days, within the time duration of 5 minutes, for the last 14 periods, it will capture the uh, market movements and shows the strength of it. When I mean strength means, so most of you know the basic RSI. I'm not going to go detail into who introduced it and what are the formulas. If you're interested, you can just Google it out and figure it out. I'm not telling it's not important, but that's not the objective of this video. Now here, for Nifty or Bank Nifty option trading, so I have kept the area, the momentum areas as 60 and 40 below. 40 below, downtrend is strong. 60 above, uptrend is strong. So by theory or by standard practices, it is 70 and 30. Okay, this should be here 70 and this should be 30. And one of the way you need to understand the RSI is, say in an uptrend, this is an up, let's assume this is an uptrend. Okay, in this uptrend from here till here, whenever there is a dip towards 30, you're going to buy, or in a established downtrend. So this is ascending CPR, right? Market is in uptrend. So market comes below 30, people buy. Market comes, RSI is 30, people buy. I mean, this is the way, it's buy on dips. One of the way to understand when you have to go for buy on dips, when you have to go for sell on dips. See here, market is in downtrend, right? See here, same CPR, descending CPR, descending CPR. Now in this descending CPR, so when the market reaches the high that is above 40, watch here, sell. Even near 50, above 50 they feel buying, below 50 is buying. So here, whenever it goes near 52, 53, market is selling. In a established trend, okay, here we have descending CPR. Market is in overbought region, that is above 70. Let's keep it above 60, okay, for our understanding in option trading. See here what happens. Descending CPR, RSI above 60, sell. Above 60, sell. Above 60, sell. So along with the pivots, you can identify where to sell, where to buy. Now, as said, RSI is a momentum indicator which measures the strength of the ongoing trend where you can pick up signal. Is that the only use of RSI? RSI is a magic tool. Honestly, it's a magic tool where you can tell whether price is likely to go up or whether it's going to go down. I mean, the momentum you can identify, and then we have something called an RSI divergence, which I'm going to show you here, like where you can quickly identify the weakness in the price and be aware that something is going to happen, and don't bet huge and lose money. Okay, it can also tell you whether trend can continue or whether trend will be reversing. Okay, you can use RSI to even target where exactly you want to exit just by watching RSI. Okay, it can also tell when to buy and when to sell. These are the majority of users of RSI. Just by watching RSI, you can identify. Just to quickly demonstrate, all right? Let me take you to the daily Nifty chart. Now here, today's objective of this video is divergence. Okay, you can identify divergence in RSI You can identify divergence in even ADX, and one of the most popular divergence other than RSI is the stochastic as well as MACD, MACD indicator. So depending upon the MACD histogram indicators and buy sell indicators, you can identify the divergence. Now our scope of this video is RSI because that is what I personally use to identify the divergence and be alert while trading in Nifty options. And this can be applicable to almost all instruments, any instruments. And as said, the general rule of thumb is above 70 is overbought region, below 30 is oversold region. What do you mean by overbought? Means momentum has gone very high and anytime market may reverse. And below 30 is momentum has gone so low, anytime it can reverse. But is that the way you need to use? No, you need some kind of practice, and the way I showed you during pivots. When in overbought zone, the trend should be downside. When the market is trending down, if RSI goes to above 60, 70, and if there are any clues, you can just short. What are the clues? I'm going to explain you using pivots. Similarly, market is in uptrend. So people keep telling buy on dips. Now you can identify where are those dips coming from. If RSI is below 30, below 40, then that is a perfect dip. And near this dip, if you see any pivot, any Fibonacci, any support and resistance with price action, that is where you need to buy, not buying in between the trend. So RSI clearly shows you. Now quickly watch this area. Higher high, one more higher high, higher high. Agree? So in this area, for your understanding, let me mark, this is first peak, right? This is the peak. Now in this peak, okay, RSI is also forming a peak. Okay, in this peak, RSI is down. This is higher peak. What RSI is down. So what I'm trying to showcase here is if you put a trend line, okay, let me remove this. If you put a trend line joining all the tops, all the peaks, what is the trend? Trend is uptrend, it's going up. Now similarly, when you join the first peak and the next subsequent peaks, what is the trend? Here price is going up, but RSI peaks are coming down, right? This is called divergence. So what does RSI says? By definition, it measures the strength of the trend. So when you just watch the naked chart, you will feel market is in very bullish mode after a few months, few weeks, if you see. But people who trade Nifty on daily basis, the moment you see these candles and small gap ups, very small gap up, all the trend is over within first 10-15 minutes, and the rest of the day it was in range bound. Prices were just raising because of gap up, but there was not much buying enthusiasm seen by the buyers. If it was really a strong trend, you would have seen a big candles, right? But see, they are small candles. But still, as a beginner, you want to identify this, use RSI. Price is going up, all the higher highs, but RSI is giving lower highs. This is a divergence, and this is the first indication of weakness in the market. Got it. The moment you see this, will the market, should you short as soon as you see the divergence? Absolutely not. The divergence can be taken out anytime. It can just go boom upside, and you cannot take a trade without a confirmation on the candles with price action. But there is a way to identify this. Okay, so this is one peak. Okay, from this peak, is there any way you can draw another trend line joining the bottom peaks. Okay, you have one peak here. So if you join this peak to this peak, this is where your signal is coming to go short. If there was one more peak, you can join here on the upside. But here with this bottom and this bottom, this is where we are watching. Okay. The signal was generated here, then a pullback, and this was a big jump where market went down. Now, can you take a trade here? Definitely yes. If there is any price action, this is an engulfing candle, right? You could have just taken a trade here. But based on divergence, before this red candle, you would have seen at this peak, there is a weakness in the market. Definitely there is a weakness. And you can stop chasing the price on the upper side. Just sit on sideline, waiting for the market to show you the direction. That is nothing but divergence. Now let's go back to today's trade. Now this divergence, again, there is a thumb rule which most of the traders use. The divergence, like in daily time frame, it should be formed above 70. See here, I kept it 70 and 30 for daily time frame. If this divergence is formed above 70, it is valid. You have a strong movement. But we are not positional traders. We are intraday traders. Now, how to catch these signals on day-to-day basis? And if you are a professional trader, you can use daily time frame or 15 minutes hourly time frame and all the thumb rules related to RSI. But the moment you know the definition of RSI, it measures strength, right? It does not make sense that you need to be rigid with the rules. All you need is, you know, the price action, you know, the pivots. So you need just a second confirmation until unless you master the price action. Now, why I'm telling this is, a price action trader will not watch any other indicator. Pivot itself is enough, or naked chart alone is enough for him to read the price action, watching the candles red or green, or I mean basically understanding the buyers and sellers sentiments with the candlestick patterns. But RSI is a great tool. This is where I'm going to introduce you to RSI. All right, so this is Friday chart. Friday, let's start from here before we go. Okay, Friday morning price opens here. We have descending CPR above 60. You get, okay, one green candle and one big red candle. Can you take a trade here in this red candle within the next 5 minutes? If you know the price action, what I showed earlier, this is a selling zone. On the Thursday, price came here, formed a kind of a congestion zone before breaking the low of the day and going further down. So this was a high probability sell zone where one could have taken a trade downside, keeping the stop loss here. Now, how you could have taken a trade? We have a descending CPR. Based on the descending CPR, price is above 60. And when you see this price moving down, you can take it. But honestly, this is not a good risk to reward trade because CPR is very close by, right? You know, CPR will always act as a strong support. Now, what happens next? This big jumbo candle forming in the selling zone does not show the strength to take the price or keep the price below 50 consistently. Only one candle forms. It's don't even come closer to 40 on the RSI. It just stops near 50. So midpoint of RSI, again, above 50 is buy, below 50 is sell. This is all the definition where you need to use it subjectively. If you just go objectively and be rigid with the rules, you're going to take a hit. So hope I'm making sense and I'm not rushing here. So here, this is one of the level 50. It comes here. And what is this level? This is the lower CPR, the bottom circuit. Whom does bottom circuit belongs to? Sellers. Has it broken the bottom circuit of CPR? No, it takes support. So CPR is a support. So no foolish person only takes trade here. But if you are not a foolish person, you will not take trade. You will wait patiently for the lower CPR to be broken. And then if you watch RSI, you have a hint. Okay, lower CPR can act as a support because this is around 50 point. What happens next? You get a inside bar. This is an inside bar price action. After inside bar, it's going up. Okay, is this good enough for you to take a trade? No. I mean, between CPR, we traders call it as a dead zone because the entire CPR can act as a support and resistance zones, and it can hit your stop loss multiple times. So we need some more evidence for CPR to break the upper CPR. Now, what happens you see at this peak? Watch the line. The upper CPR is broken, and RSI from bottom, you can see a kind of trend setting up. But you know we have an established selling zone at the top. But whenever the upper CPR is broken, usually I advise to take a trade. Upper CPR belongs to buyers, especially in the first half of the day. You can take this confidently. There are several other tricks involved here that we can share it some other time, but as if now understand upper CPR belongs to buyers, lower CPR belongs to sellers. You take here, target would always be the previous double top. This is a double top. Now near this double top, watch here, this is one top, this is second top. Now in this top, RSI is showing a divergence. Yes, it did not go here, but the momentum is lesser than the first top. You can identify this, right? This is not a divergence, but you can definitely identify the momentum here in this established selling zone is lesser than the opening candle, and then you get a kind of morning star. Usually the way I trade is once I get this doji, I mean, usually based on price action, people keep taking trades here. The moment they find one red candle, that means it's a signal. Okay. The sellers are showing you a signal that in a selling zone, we want to go short. If it breaks, fair enough. If it breaks, your stop loss is very close by. And then you can take a counter trade confidently on the upside. Now, that's how trading works. So here, RSI is giving you a momentum is very low. What momentum? Upside momentum is low. So immediately after the doji, you can take a trade targeting low of the day, or you can scalp few points because CPR is very close by. The risk to reward, if you go by risk to reward kind of trading, it's not 1:1. I mean, maybe 1:1, not 1:1 from here to the upper CPR, but you can scalp points still here. Now watch what happens here. Okay, here, this momentum is very strong than this, because at this point of time, this trough of RSI is lower than the first trough. Okay, the low. So this is where you can join these two peaks and join the upper two peaks and create a channel similar to the channel movements or we track on naked charts. In this channel, observe, this is again lower CPR, double bottom. Always I keep telling during my knowledge sharing, double bottoms, double tops, 65% of the time fails in the first attempt. You saw here, first attempt fail. What is this? After this, this is the first attempt. And then when you combine the price action of this, you have a strong reversal pin bar, right? This is your sign from price action point of view to go long. But since it is in between CPR, we will wait for upper CPR to be broken and see near the upper CPR, although it is a very strong candles, near the upper CPR, the RSI channel is also broken. Now, this is where you have to take the trade confidently. What will be your stop loss? You can keep the stop loss below the previous candle or the candle which broke the upper CPR. See, this has broken the upper CPR. You enter, it might have hit your stop loss. Again, it breaks. So the stop loss should be ideally the central CPR or the lower CPR. What professional traders do is, this is where price has clearly taken support, the lower CPR. So if you're taking here, your stop loss will be below the lower CPR, where you can quickly take a counter trade after 5 minutes closure. So you take a trade here, wait, and you have a RSI breakout on the channel and see what happens. Price wavers around here below 60, but here above 60, see the way the trend has moved. Until yes, even this bar has come and tested it. After how many? After almost 40 minutes. So price has not gone anywhere for 40 minutes. This is how the option works. So it goes up and down because of the oscillation of price. We will be scared, and we see these overlapping candles. We see that there's no trend. We have a double top here. We feel, okay, this is a selling zone. We should enter after the break of it. Fair enough. Different people use different tactics, but upper CPR broken is always an uptrend. And beyond that, what is the overall market context? The overall market context is market is falling down for quite some time. So since it's falling down for quite some time, on this particular day, it didn't even test the previous day low. Instead of that, it is taking the support near the central CPR. Price opens above central CPR is a sign that market might reverse until unless proven wrong. So this was proven here that CPR is acting as a support. When CPR is acting as a support, forming a double bottom, what should you understand? It goes up. That is how you need to read the market. Okay, market goes up. Now here, another signal on Friday. Just watch this. First peak, second peak, third peak. By Friday close, third peak is today's open. So prices is going up. Today also gap up. But what is RSI showing you? The momentum is dropping. The strength, the buyer strength is dropping. So today at the opening, if you were, yes, it opened outside the previous day range based on pivot rules, previous day range and above R1 or a high probability trades to go long. You're not going to short. You will wait for price action, but RSI has cautioned you to wait patiently. You're not going to jump into the call at the opening itself. So what happens after opening candle? You see a strong selling pressure, a strong wick which is more than 50%. Then you get a sharp pin bar and a confirmation red bar. Now this is the confirmation, the red bar for you to go short, right? What would be the target? CPR. What would be the stop loss? Above this red bar, because still here is a pretty long stop loss. So if any candle reverses from here above this doji, the second 5 minutes, I would keep a stop loss. So this is just to show you. All right, now move this one to here. First peak, this is second low. What is the area of location here? And again, yes, very important with RSI is on pivots, the location. It is not anywhere in between. Now this price action is very closer to the previous day high. This is an important pivot, important turning point. So you can confidently take this trade by reading the RSI. And if you see here, when I join the troughs low of the RSI, this is where it is breaking the low, which means price is coming below 60. An indication, even though if it is a pin bar, an indication that the momentum has dropped below 60, which means it will go towards 40 or 30. Did it happen? Yes, it played here for some time. But even in this play, when the market price is same level going up and down, what do you see on the RSI? Is it at same level or is it going down? The strength is going down. Although buyers were buying here, the buying did not have energy to keep the RSI, the last 14 period of RSI at the same level. It was going down. You see here is a pin bar, here is one pin bar, here is one pin bar. Slowly prices are going down. This is how option trading works, right? It moves slowly. Very rarely it goes fast like what happened last week. It does not happen every next day. On a daily basis, this is what the price action we see. Now this RSI is showing you trend is going down. Although the reversal pin bars can confuse you, the previous day high is your confidence where price has broken below it, and with lot of price action and negative divergence on the RSI, and you can confidently take and book your money. Now this is a ascending CPR, although overall market context is sideways, up, down, up, but last 2 days it's ascending. Where do you get the buying? Near upper CPR. Whom does upper CPR belongs to? Buyers. Now what do you see on RSI? Okay, we have a very strong momentum. This almost touched 30, but the next candle pulled up. See here, it just pulled up. And the next green candle breaking the CPR, and if you join these peaks, candle has broken out of the trend line. Not the chart trend lines, I'm talking about RSI trend line. And the RSI is moving inside from 30 to 40. Whenever it comes inside, it's going up. Now this is morning, we understood this is one selling area because support was broken. I think I explained you at the beginning, right? So another peak is formed. This peak I have already explained you. All right, we'll take some other examples. There are a lot of examples, but you need to understand the holistic view. Watch this one. You see the very strong downtrend descending CPR, right? This is a descending CPR. In this descending CPR, price pulls back after a sharp downfall, it pulls back to CPR. Again, this I have taught you in my pivot knowledge sharing. Anywhere when you face S1 as a support, market will always come and test CPR, previous day low above or above S1 CPR. Now near this CPR, we see a lot of price action. This one pin bar is the first indication. If this pin bar is formed at the bottom, it's buy. If it is forming at the top, it's a first weakness, and lower CPR belongs to sellers. All right. And you have one more pin bar here for last 20 minutes, 30 minutes sideways. People are scared because of this fall. Most of us will be scared whether to enter or not. But if you know this belongs to sellers, and in this sellers, watch this peak and this peak. Price is at same level. Peaks are at indication. And this reversal pin bar breaking was your sign to go short. Above this should be a stop loss. Fair enough, price comes down, it goes up. But what do you see here? It's just around 50. So you have to hold your cards, believing if it hits stop loss, fair enough, it hits, but it's a very high probability trade. So there you go, it comes down. It just comes down. So one way of identifying the divergence. This is a divergence. Let's go and see next. So I'm not using a thumb rule that I want to see divergence only above 70 and below 30. As an intraday trader, what is should be your primary GPRS of market, along with pivot. If you are scared to trade at pivots as a beginner, then only use RSI signals. RSI signals can alone be used for trading, but it's a separate practice where you need to use this practice using stocks, not options. and you need to stick to the RSI thumb rules which you see on all the Googles. When this method indicates that RSI can be used anywhere, everywhere, all I am looking for is strength. Whether there is a strength in the pre-established zone. If market is going up, next time when the market comes up to a selling area or to a buying area, is there any strength? Can you catch this strength using RSI? That's all you need to focus on. Now watch this one. Market breaks previous day low. Usually taught many times, previous day low, S1 pivot breakout is a strong trend, right? So here it comes, it goes up in between. Watch this area, right? It forms a morning star. This is a previous selling area. People will take all fine, all fine. So most of us will do some multiple tradings here. Pullback. After it comes, it gives another pullback. Now these are all flag breakout patterns, but let's watch RSI. Now this is previous week high. This is S2 pivot. Now near previous week, I'm focusing only on pivots. The location should be pivots, not in between. Understand that. Very close. Okay, this location is S2. Where is the peak? Peak is here. Now when the market comes back next time, this is previous week high. Now here you have a doji, then your market has given another doji closing below this, then market price tries to go up, it has come down. It's a strong downtrend. But here, when prices are pulling back, most of us will be afraid because option price, because of premium or volatility, will be oscillating 10 points down, 10 points up. But thumb rule of option trading is you need to buy cheaper to make high money. Now, if you buy a PE here, imagine how much money you'll be making. Suppose after this red candle, if you have purchased, the green candle would have made you quit. I'm talking about the new traders, because it would have hit around 20, 15 to 20 points, right? Per lot, maybe around 1,000 rupees, 750 to 1,000 rupees. So you will not have the courage. But what gives you the courage is RSI. The buying strength here is lesser than this peak. It is not able to go above this peak. So there is a weakness here. People are scared because trend is down. So what do you do when trend is down? Sell on raise. That's exactly what is happening here. How you can identify this? You can identify with this bar as well. This is near S3. You have a sharp pin bar. Usually with this pin bar, I'll go down, but maybe you might be confused. Okay, this looks like a morning star or whatever it is. It's coming here, but watch again. This peak, this peak. Price comes here, but the strength is still weaker. It's not able to take it up. So, okay, the strength is still weaker. This peak is lesser than this. So the trend is going down. Similar to the chart, trend is going down. But the only difference is the momentum indicator is also following the chart and telling you that, yeah, market is in downtrend because there's no buying strength involved here. Suppose if near this pin bar, if this peak would have come closer to this, then you should be worried. Still market is downtrend, but it is showing a strength. It is showing some strength where the previous peaks have been taken care of, which means somebody is showing some buying strength or buying interest. That is how you have to understand. But I would watch for locations. Okay, always location. The locations are nothing but maybe your support and resistance, Fibonacci. If you use Fibonacci, if you're using pivots, it should always be pivots. I use pivots. The location, where exactly the trading locations are. Okay, watch this one. Descending CPR. What does descending CPR says? Buyer sentiment is on the downside, but market booms up. This is the R1. If market faces resistance near R1, there are all high possibilities that market can come down and test the CPR. Now here, one doji, one weakness pulls back. First peak. Second peak. What do you see in the second peak? Price is going up, but peaks are down. Do you see any price action here? Okay, above, below R1, this has closed. Then you get a doji. After doji, sellers make a decision to take the price down below previous day high. This is your sign to go short, targeting the low of the first candle or CPR, keeping your stop loss above the high of the day. What happens? Price is above 70 overbought zone. Market is in intraday downtrend because of descending CPR. So sell on, raise, market comes down. It comes down here, takes support on the upper CPR, goes up, comes down, takes again support on the lower CPR. Watch this peak. This peak, this peak. Okay, there is a strong momentum here. Price came below this, so there is showing a momentum. But when the next time it happens here, you can watch it. CPR is a support. You have a morning star, and you can see the weakness in RSI as well. So this big candle did not bring the RSI below 40. Near the CPR support, above 40, it was going up. So with this morning star and the upper CPR belonging to always buyers, you can definitely go long here, keeping the low of the CPR as the stop loss. Look what happens, market just goes up. So in between, I wouldn't advise you to trade because you have highest risk to reward and minimal stop loss when you use this method only near pivots. By the way, this is the divergence. Market is going up, RSI is showing the opposite direction. That is called divergence. So let me see if there is. I showed you the negative divergence on daily pivots, right? This is also a divergence. Above CPR, price is going up, but the two peaks are showing down. Even if they stand at the same level, I consider it as divergence because price is not showing following the the RSI is not following the price. Where else I can show you? This way, you can identify the market moves very clearly along with pivots and make a lot of money. See here, price almost at same level for me. It is below 60, but in option trading, all I need is a signal. Is the strength, buying strength, although price is at same level, because we watch this. Okay, we want, okay, let this range be broken for upside this level or to the R1 pivot. This will be our understanding or logic. But when you see RSI, this buying, this buying, this buying does not have any strength at all. So this is your indication. Okay, yeah, I have something I need to short. When do you short? This is a wick to wick engulfing candle. You got your trading signal. RSI is below 60. Enter here, target CPR. That is how you're supposed to trade. Hope this helped, guys. I mean, there is volumes of knowledge on RSI where even the double top, double bottom, head and shoulder pattern, all these patterns can be tracked on RSI and can be traded. We will make some other video on patterns alone, or if you are in a hurry, you can just Google. There are various knowledge sharing available on the Google. Hope this video helped you to trade in options. Thank you so much. Please do support us.